Hi, so I'm here today with Kiyan and Alex from Sturgeon Capital. They've been investing in Central Asia forever. And we're going to have an update on what's going on in Uzbekistan. This is one of the asset classes that they've been pushing, and they think that, like a lot of people, that it's at a historic turning point and that there's a lot of opportunities as one of the last bigger untouched emerging markets, or probably frontier markets, left out there. So, Kian, why don't you kick off? You say you were down there. I mean, can you bring us up to date with what's going on with the coronavirus down there? They've been pretty quick, I think, to put lockdown, and they were very worried about it. But what they've done seems to be relatively effective.
Sure. So the last time I was there was with my colleague in, let's say, mid-February, when really Corona was starting to become across borders from China, and you were seeing cases in various countries. And at the time, anecdotally, when we were getting off the plane, every single person was being temperature scanned. And shortly after that, basically a week after that, they implemented full lockdown. So in a way, borders were closed. Everyone, to an extent, had to stay home. And the irony was, when we flew back to the UK, when we went through the airport, it was as if nothing was happening.
Right.
So they were pretty early in trying to get in front of it, and stringent in doing so.
Right.
And they realized.
I mean, have they managed to control the epidemic there?
Well, to the extent that if you look at the official numbers, which I'll just draw up now, you can see that it's pretty low. So you would argue that they've done quite a good job of getting in front of it. I think in total they have about 5,000 cases, and they had 50 deaths.
Right.
And I think it's actually 10 deaths as at the end of April.
And we should point out, this is by far the most populous country in Central Asia.
33 million population, doubly landlocked, so it has a lot of borders.
Yeah, yeah. And in terms of the economic response, happily, I think, well, Uzbekistan is actually well endowed with financial resources. So they've built up a huge hard currency reserve, a large part of which is gold, which
correct
out the ground.
It's counter-cyclical.
Yeah, so that they're in a good place. But nevertheless, Yazov asked the government to raise, what was it, $1 billion in foreign borrowing. They went to the IMF.
So they've tapped into the development banks and IMF, ADB to get let's say security financing in case they need it. And you're right. So reserves to GDP are about 30%. Likewise, debt to GDP is already quite low, and external debt that they have is also extremely low. I mean, they had their first Eurobond issuance in February 2019. So on an absolute and relative basis, the external debt that they have is much lower than some other countries within the region.
So low debt, lots of cash, and the banking system is in a solid shape?
So the banking system at the moment, there is no data to be seen. The reason being that they ask banks to give a grace period for companies not to have to pay interest. So basically, probably towards the end of Q2, you'll start seeing data coming into the banks on non-performing loans. The biggest hit actually is from remittances.
Right.
So about 15% of GDP is from remittances, the bulk of which comes from Russia. And our expectation, and I think general consensus, is that will be down 25 to 30%.
Right.
So to put it into numbers, the predicted GDP growth was around 6%, and now consensus is between 1.5 to 2%. So a significant contraction, but we won't be going into a recession. I mean, that's pretty.
So that makes it already quite an exceptional case. I mean, they're still going to put in growth.
Yes, considering even beforehand you had a limited foreign capital, you were already coming from a low base. I mean, just to put it into a relative picture, like you said, you're talking about a country of 33 million population, but GDP per capita, with all the resources that they have, is about $1,500. Now you compare that with Georgia, let's say, with 1/5 of the population with no natural resources. They're at 5,000. Kazakhstan with, let's say, half the population but much more natural resources, they're at 8,000. So you're already coming from a very low base, which in our mind we define as giving you a large margin of safety. This event has shown that.
Couldn't you also say that, I mean, another advantage, it's got two, I mean, having been a pariah state under Karimov for so long, that because it's not integrated with the rest of the world,
correct,
part of that process, that actually that lack of integration acts as insulation and has
Yeah.
made the country tougher or more resilient to the external economic shocks, because it just simply wasn't hooked into the system before.
That's correct. I mean, if you look at the largest trade partner, it's ironically Switzerland, and that's because of gold exports that they send there to refine. Right?
Right.
Now, after that, obviously, China is a big trading partner, and that will be it. But in the short term, we're already seeing kind of China recover. But you're right. That let's say if you look at emerging and frontier, the countries that are in most trouble are the ones that have dollar funding, and a lot of discussion has been had about that. But as I said, the external debt that the country has is both on an absolute and relative basis minimal.
Isn't another one of its disadvantages turning into an advantage, in so much as of all the stands, that it's one that doesn't have these natural resources, oil, gas,
Sure.
and consequently, and this large population, which gives it a
Yeah.
consumer base, which again tends to insulate or isolate countries because they can turn to their own economies in order to make money. And that the result of that is that Uzbekistan has always had a much more diversified economy. I mean, when they drew the map, I think the Uzbeks got all the best land. I mean, they the Fergana Valley and Tashkent, and of course there's big deserts in the middle, but the bits where the people are living are actually quite fertile. You know, the famous silver. But then this led to, you know, obviously cotton was the basis of the Soviet economy, but they have food processing, they have manufacturing, they have a proper consumer economy, so you have all those products. And that too, isn't that made the country more resilient? They're not going to have problems with unemployment or things like that, are they?
No, so the way we think about it is, as you said, they have a, let's say, diverse resource base. So one of the benefits is that it doesn't have oil, so you don't have as much volatility as, let's say, the other stands do. Both on
it is self-sufficient in oil, isn't it, more or less?
It is a net importer as far as I'm aware, but they're big producers in gas. They don't have one part of the economy which makes up more than 25% of GDP. Agriculture is a large part, and general industry is a large part. But what they've been trying to do is, if you look at the resources that they were producing, you could argue that they were under capacity a lot. So they were trying to reach full capacity, which, if you think of it from a company perspective, is the equivalent of increasing a top line or revenue. And what they were doing in a lot of areas, if we take agriculture as an example, was move up the value chain. So whereas before they were producing raw cotton, they wanted to move up the value chain and not just produce the raw material, but either have branded products, or the same in agriculture, for example. They were producing, they're one of the biggest producers of capers. What they would do is they would produce capers, send it to Turkey. Turkey, they would brand it and then sell it to the US. And the margin differential they were missing out on was huge. And now you're seeing efforts to move into branded products. And if you put the two together, it's effectively a country akin to a company that is trying to increase their top line, but also the margins through moving up the value chain. And again, coming back to the concept of, because they were operating from such a low base, the level that you could fall or contract is limited relative to other countries.
So to drill into that in a bit more detail, that there's a whole number of reforms, but the one that caught my eye, I mean, when I was there in the 90s, that cotton was everything. It's even in the national emblem. However, the government's proposing to ban the export of raw cotton entirely, which runs in billions of dollars a year, and effectively force everybody to go into value added and textiles, finished cloth. And when I was last down there in September, I was told lots of the big international chains like H&M were in town and looking to source t-shirts, jeans, denim from Uzbekistan, which has been untouched. And they also had this problem with the ban related to the child labor problem. And I think that has been rescinded now, hasn't it?
That has been rescinded. So I mean, that was the most, let's say, one of the most contentious parts of the previous administration. And this administration has been quite firm and stringent in addressing that, in the sense that the last external review that was done, I think they completely reformed that issue of, let's say, child labor within the cotton fields. And there was previously sanctions even in place against Uzbekistan related to that. No sanctions have been lifted.
But there's no deals yet. There's no, like, you know, H&M or CNA.
There are not. What I believe is happening is that External parties want to see that these reforms that they've made within the cotton sector will stay there for a period of time, to then allow for them to become part of the international value chain for cotton textiles.
Yes, so there is actually a coalition of human rights groups, I think it's called the Cotton Campaign, that are sort of dictating the policy as to whether foreign companies should source cotton from Uzbekistan, and they're still saying no, really, until there's they deem there to be a sustained and complete eradication of child labour in particular.
So they want to go beyond the words and actually see the proof of the pudding, and have a harvest which is clearly been done on whatever commercial terms with labour.
Yeah.
But at the same time, I also heard that there's a lot of Chinese companies in particular, and money pouring into textile mills. I mean, everybody's basically assumed that this ban on raw cotton is going to go ahead, and that you have to get into textile, and moreover, it's good business. Particularly now that the cotton ban is going to disappear, so you can import. But isn't that one of the more exciting sectors in the country? Is the whole textile mills, fashion, production of clothes, etc.
That is correct. So to the China point, it's important to note that Uzbekistan falls firmly within the One Belt, One Road program, where there's a lot of either confusion or criticism from, let's say, the developed world, but effectively we think of it as the Marshall Plan to the power of free. You have talking about $1 trillion investment program, and then the question of what it actually benefits the country. On our view, primarily capital is going into infrastructure, and what that infrastructure does is it eases the country's ability to do business with the world, whether it be through railways or through infrastructure investments or investments within the textile industry. And we've seen the Chinese be very active. So it's effectively taking, if Amazon was a corner shop, if Uzbekistan was a corner shop, it's putting it on a platform akin to, let's say, Amazon, to deal to now trade its products with the world in an easier manner. That's how we see and define the One Belt, One Road. And go on, sorry.
Go on. I was going to change subjects and say, look, another one of the big and early reforms has been to the banking sector.
Correct.
The government has always been terrified of having the banking sector taken over by Russians. I mean, one big Russian bank could come in and effectively buy the entire sector. And they want to keep some sort of, autonomy there. And so there's been these restrictions on foreigners owning bank shares, but that's now starting to be eased. And I think last week we actually saw our first fully fledged investment bank, a small bank from Switzerland, got a license to operate. And there have been, I think, a Korean bank and a Turkish bank have been allowed.
And Georgia, TBC got their license.
And TBC more recently, which is looking at the retail space. Yeah, and that makes sense too. I mean, it's the biggest bank in Georgia, but we talked to them and they said, look, the number of people in Uzbekistan signed up to this fintech thing that we bought as a way of getting in. That's more people than in the entire Caucasus, because of that. So it makes total sense for them to expand. But for the Uzbeks too, it's like a nice London-listed EBRD bank, competent bank with all the resources behind it that entails, coming into the developer sector, but not a big political sort of open like Russia. Correct. So all of these reforms are going ahead. I mean, what stage is it at? Because typically when countries open up, the banking sector is the first to boom, and it's the easiest way of getting exposure to the consumers as well.
Correct. So for us, the banking sector or the financial sector as a whole is very interesting. I mean, to put it into data terms, you're talking about a country where 50% of the population simply do not have a bank account, right? Which by law now that has been changed in the sense that if you want to receive your wages, you can no longer receive it in cash, but it has to be through a bank account. Why? Because with that 50% of the unbanked population, you had a high level of tax revenues, which is not being collected. Right? In parallel to that, you also have about 5% of the population that has ever taken a loan from a financial institution. Right? So you're talking about a really underbanked country. Again, for a population of 33 million, 65% of which are under the age of 35. That's a huge opportunity. Now, if you look at the banking sector as it is today, you have about 80% of the banking sector, which are effectively state or semi-state banks. which more or less act as, let's say, fiscal policy tools. They just, to an extent, subsidize lending to state or semi-state businesses. And so for us, we believe the retail and SME side of the economy to be the most interesting in terms of finance. So if we look at many SMEs, the access to finance is extremely limited. In many cases, they're taking effectively wholesale funding from their suppliers at a very high rate. Similar with consumers, there's just not an effective way for them to access financing. And so we see multiple ways of trying to go about this, addressing this opportunity set that there is. And like you said, you've seen a number of banks from the region get their licenses. And I think the chance that they'll do well is very high. You're looking at some of the highest net interest margins in the world.
And these banks are listed, aren't they, on the Tashkent exchange?
That's correct. By law, if a bank has to be listed on the stock exchange.
So they're investable in that sense. I mean, I know that
Sturgeon
Capital, I mean, they've been buying stocks, and moreover, they tried to repatriate some profits and managed to do it without any problems. So the whole system works with convertibility.
Yeah, so the whole system works, yes, in terms of getting capital in. I mean, that was for us what we define as the fall of the Berlin Wall moment and really making Uzbekistan investable. And we've been investing there for 8 years, but on a small nominal level. And the real issue behind not being able to invest more was the capital controls. It was very difficult to get capital up. But when they had the currency unification, effectively took a 50% hit on the currency in one day, that made it possible for an investor to get capital in and capital out with relative ease. And
you're focused on what, private equity or publicly traded or a mix of both?
So frankly, for us, there are two aspects. The public equity market as it is very difficult to allocate meaningful capital. So you were talking about, let's say, 50 to 100,000 average daily trading volume at best, right? And our view is the majority of the companies on the market are, let's say, again, state or semi-state, whilst they're going through a reform plan to decrease private IPOs on the market. As it stands today, as an investor in those companies, effectively the thesis would be that you're to an extent front-running the hope of foreign flows, right? And for us, that's difficult to control performance, and it's the hope of something which, again, we cannot control. Whereas if we flip it on the private equity side, we have zero competition in the sense that the fund that we launched, which is dedicated to Uzbekistan, is, as far as I'm aware, the only international private equity fund investing in the country. We have an abundance of deal flow. The country is full of entrepreneurs that have been doing quite well under these times and would need capital. And you're looking at management teams which are arguably of very good quality, which you wouldn't otherwise be able to find on the market. And you're investing at valuations which are as good as what you would find on the market. And you're getting involved in a situation where you have much more control of the variables that are important as opposed to public markets.
And your return is in the form of dividends, or are you just building value and looking for an eventual exit?
Well, predominantly the latter, in the sense that we're looking to build value and exit. Now, there are certain situations where, for example, you have in the agricultural space, which we talked about, you have Uzbekistan has a key comparative advantage. One is the cost of production of these agricultural goods are extremely low, and the quality is extremely high. So if you've been to Uzbekistan, for example, you eat the vegetables that are arguably the best quality you've ever had. And you have companies which are effectively trading companies, and they export everything that they produce. So you have hard currency earnings. And in a scenario where the country was to go for, let's say, currency devaluation, it actually plays in your favor in the sense that your margins expand with local currency costs, hard currency earnings. And there is no real residual value to the business because you don't have any core operations, you're simply a trading hub. And for them to access working capital financing is very expensive. So there you can provide financing where you effectively split the profits from the export trade. And that effectively is a dividend, let's say, play, in the sense that whatever money they make every year, they pay it out in cash. And what we see there is effectively the returns of capital are around 50%, which is
great. And the corporate governance, I mean, you know, it's not really sort of famous for its legal system and all
that's correct. So the way we go about that is, so what we did in Uzbekistan when we decided upon launching the fund there was to hire a local team. So and that's headed by a gentleman called Ali John. And he arguably, in our eyes, is probably the person with the most private equity experience in the country. He was the CEO Sturgeon Capital, which today still is a joint sovereign fund between Oman and Uzbekistan. It was funded with $200 million, investing purely in private equity in the country. Ali John joined us just over a year ago. And the way we address the corporate governance is, one, we do extreme, in our view, due diligence on the management team, the stakeholder map of the companies that we're investing. But in all cases, we insist on at least one board seat, the right to appoint a CFO, and the right to veto major capital allocation decisions, which normally is where you would see weak corporate governance really play out in terms of negative consequences for the company. In our view, we have to an extent control over those decisions.
And the government, has it done anything in order to protect investors? I mean, the Georgians were very active in that, and when shooting up the World Bank doing business by putting in very sort of proactive transparency laws, reporting laws, legal guarantees, so that if there was disputes, that you could go to the court. And Russia too, actually, although it's not famous for its corporate governance, the arbitration court in Russia has been very effective, and people take it seriously. Contracts mean something now in the way that they didn't used to. Isn't it still extremely early days in Uzbekistan?
Yeah, so we don't have too large a sample of, let's say, cases where one could draw a conclusion as to how the judiciary is behaving. There's one that I was aware of last year where, if I'm not mistaken, it was Coca-Cola that brought a case locally for copyright. And actually Coca-Cola International won against a local company. But again, that's a sample size of one and not too instructive of how the general trend is. Now, what I do know is, one important thing is, if you look at the roster of ministers in the country, as opposed to the previous administration, it's filled with what I would call true technocrats. So these are Uzbeks where they've studied abroad, they've had good jobs, and they've come back. They've been attracted to come back to take on ministerial positions. And what is interesting at the same time is they increased the wages of government employees nearly tenfold. One, again, as an incentive to root out inflation. But the metric of which they judge themselves upon, similar to what the Georgians did in the early reform period, are international indicators, whether it be ease of doing business, openness, and all of this sort of stuff. Now, you could argue that these indicators are not the best judge, but that they are the only external indicators which are, the ranking is not put together by Uzbekistan itself, that can determine as a yardstick how the country is performing. And if you look at those metrics, the country is doing very well, and the government and the ministers on an individual and absolute basis are kind of working very hard to meet those goals.
Well, they're working extremely hard. When I was down there, everyone was very encouraged, and they said that the president's being incredibly proactive.
Correct.
And the regional guys were complaining. They're saying that we're getting 300 emails a week from the president's office saying, do this, do that. But we only managed to get about 6 of them done. And the limit at the moment on the pace of reform is the bandwidth. There's simply not enough people in the administration in order to put all the reforms that they would like to put in place.
Sure.
Do you think that's going to, that's the drag on reform? And it's also the lack of people experience,
Correct.
what have you. But they're working very hard. So, but it's, again, if you look at the investors, I talk to them and they're like, yeah, this is all extremely interesting, but we're going to wait. They've got so much to do. We're going to wait until it gets a bit further down the road before we commit. Isn't that your experience with your potential investors?
Well, look, so we have to come from if you're talking to a typical international investor, there are 2 angles which we see. One is that the average investor, let's say you're talking to a US investor, simply has never really come across Uzbekistan in their life, right? So as attractive as it may be, there is a whole introductional process educational process to explain what this country is, what context one should think about it, and then provide further context in terms of the economic reforms that take place. The second aspect is, especially in the past 10 years, you've had many countries defined within the frontier space, that there have been stories and narratives of promise and kind of things, if you will, and frankly, investor performance hasn't matched that. So you have the cynicism on frontier in general, and Uzbekistan not being the most known country.
Yeah.
And that is what the job of us as an investment manager attracting capital to funds is to do. Uzbekistan is, relative to other countries that we've looked at, has been, and Alex can speak to this more, easier to raise capital for. Because you have all these dynamics, and particularly it's coming from such a low base. I mean, in our view, and the way we describe it, not much has to go right for the country to do well, right? So going back to the reform point, you have an optimal level of pace of reforms in terms of them being executed. But let's say that they achieve only 50% of that. That's, in our view, still good enough for you to do well within the country, right?
Look, a last topic, because I wanted to run out of time completely. There are a few big, sexy companies, and the government has, for example, brought in Alisher Usmanov, who is a big Russian, Uzbek-born oligarch, who famously bought 8% of Facebook ahead of the IPO and made billions of dollars, and also set up Metal Invest in Russia. He's also big into tech. I mean, he is actually very competent. And distantly related to the president through his wife. But he's been asked to come and restructure these companies, basically to get them ready for potential IPO in 2 years' time, which also points to the whole issue of privatization, that the Uzbeks, I think, are going to take a leaf out of the Russian model, and they're going to sell off some equity stakes, maybe take something like Navoi, which is such a huge that they'll retain control of it, but certainly there's going to be an opportunity. But I mean, isn't this going to be the, because all of these countries, even Mongolia, they have a few big, sexy, usually raw material producers. And that whole privatization process, the restructuring process, and also given the problem of lack of bandwidth, you know, what's your take on that? I mean, is there going to be a big privatization campaign sometime?
Well, there's certainly they're planning on doing so. So I believe they published a list a few weeks ago of 1,200 companies which are looking to privatize, either in full or in part. And again, the whole process of that is, again, going to investors and explaining what sort of assets there are, what sort of terms are being privatized. I mean, our view is not that we believe they are not good opportunities, but it's not what we're looking at all. So the problem that we see from our perspective, I'm sure there are investors that can do very well with that, is you're taking a company which has a legacy, let's say culture, a legacy way of doing things, arguably an inflated workforce. And as a new investor in the country that wants to be there for the long term, it wouldn't particularly be great for our reputation, let's say, if we had to bring efficiency to half or make the workforce 1/3. The real opportunity that we see is what you've had over the past 5 years, which front-end markets didn't really have before, was an emergence of the basic infrastructure allowed for technology, right? So smartphone adaptation is above 50%, nearly 60% in the country. We have a young population, everyone is using a smartphone, and arguably is one of the most important assets that someone has in the country. What you also have is a dynamic where there are no, let's say, venture investors in the country at all. You have zero competition in terms of capital. You know what business models generally work, that is, have normalized unit economics that are positive, and the ones which are scalable. So our strategy is, and you've seen, and you can take this even to the banking sector, where if you compare a fintech company, let's say in UK, let's take Monzo, and Russia or Kazakhstan, let's take Tinkoff or Kaspi. You take the base case that there is a population that have never had a bank account, and you compare that with the West, where everyone has, let's say, HSBC, Citibank, or whatever. And if you're providing a fintech solution in the West, it's in addition to what you have as your core default base. And in these countries, you're going from no one has an account to now they can directly leapfrog and go towards the most optimal solution.
Well, that was TBC's strategy, wasn't it? I mean,
exactly, and it worked. And it worked. So you have many other aspects where we believe it can do well. So we're talking about, we're invested, for example, in what is today the largest cross-border e-commerce business within the region, and Uzbekistan is the largest constituent country. This is a company that's growing about 38% a month. It has basically virtually no competition. And this corona has done nothing but accelerate the transition of individuals that previously had no experience of shopping online to now by default having to only be able to shop online. So if you want to think in terms of customer acquisition costs, let's say it was $10 per customer you had to spend on marketing, today it's 0.
Right.
And these are sticky stuff.
But if you said several times you have no competition, you're the only ones there. So, you know, it's a bit of a turkey shoot when it comes to finding investment projects. But then that also means there's a problem with the exits because there's no one to sell to if it's only you. So, I mean, where do you see the exit? I mean, because it's locals plus strategic internationals. And I think you could interest the strategic internationals because of the population. I mean, you scoop up the whole of Central Asia if you go to Tashkent. That was always the argument of going to Tashkent. But then locals, there's not that many, and the Chinese would be interested. I don't know, where were you going
to? So for example, so there are a lot of, let's say, Russian. You already have a few Russian tech companies that are active in the country. So for example, you have Russian software companies that are selling enterprise software in the country. And we've seen a few Chinese players in so for example, you have AliExpress in the country, but let's say they're not the most active. But it is true at the same time that you have this dynamic of kind of the large population in the region, you have all this kind of untapped consumer market. And our view is two things. One is that that whatever business that we're investing in, for it to be the leading within the country, we are not looking to operate in such a manner that we're racking up losses on the underlying operating companies such that we would need to exit. That is, it is important for us within as quick as possible that the companies get to positive cash flow. And the benefit of Uzbekistan is the cost of getting there is a fraction compared to other countries. And then you have one which is a higher probability dynamic in the sense that we believe, let's say the likes of Yandex, let's say the likes of Alibaba, or these large tech players where they're very active in M&A to the extent that Alibaba, 1/3 of their income is investment income from their M&A, from their venture portfolio, that they would be interested in a country like this. And in the lower probability scenario that whilst the country is going through trying to be as aggressive as possible in reforming the local stock market, that should it be at such a stage within 5-7 years that it is reasonably developed enough, that these would be the prime companies that one would want to list within the country, both from the government perspective and from the individual perspective, for the average investor in the country to get access to.
Last word, and just a few words. So can you tell me a little bit about your funds? You've got a private equity funds, one that you raised money for, or you have a second one coming, or?
So we launched the fund in terms of the first close, to put it, was done in the beginning of March. And we've already made 3 investments. The fund will remain open for another 16 months, at which it will have its hard close. And the life of the fund is 5 years, and we can extend it by 2. So at most, the fund will be invested for 7 years, at which point we have to exit.
And your AUM?
Within the fund, our total that we're targeting is $35 million, and we've raised about half of it.
Right. Guys, I wish you all the success. It remains extremely interesting story, and everyone who goes to Uzbekistan enjoys it. It's a special place. So good luck. Good. Thanks for talking.
Thank you, Ben. And if you're looking to come out there when things are normalized, let us know. It'd be good to
absolutely looking to go again.
Thank you very much, Ben.